Hi, Tim. How are you going?
I'm great. Thanks for having me, John.
Good, Tim. Thanks for agreeing to appear on the show. Tim, what I want to discuss is Airtasker. So, if I look at a bit of your background, you were the founder, and you were the founder and the CEO of Airtasker, but you started life by being a senior analyst at Macquarie, and
That's
then I
right.
see you changed to being a consulting talent agent. Now, how does one go from being an analyst to a consulting talent agent?
Well, when I was working at Macquarie, it was a great period just before the last financial crisis. So, in 2009, they made our department largely redundant. We were in the property section of Macquarie, which is a great experience. But I was looking for the next thing to go and do, and thankfully I didn't need the money, so I was able to work for free. And at the time, I was watching a lot of the show Entourage, and I wanted to be like Ari Gold from Entourage. So I went and applied to work at all the talent representation agencies. And I said, hey, look, I'll work for you for free, number one. And number two, I'm really good at PowerPoint because I've come from investment banking. And so I can help you do the PowerPoint presentations for all of your pitches and proposals.
And did you make some money at the end of the day? Did you represent anybody that I know?
So after a couple of weeks working there, probably about 6 or 8 weeks of working there, they decided that I was helpful to them, and so they started paying me a wage. But I think most importantly, I got to work with a woman named Ursula Hufnagel, who was the founder of Chic Management, the agency I was working with, and Ursula is known as one of the great model scouts of the world. She found people like Miranda Kerr and other people like that. So it was a great experience to work with someone who's that good at their craft.
Great. Then you left there and you went to work for a Mason. And I see that you're also the advisor of Float Space, Mad Paws, Car Next Door. You're a co-founder of Tankstream Labs, the Circuit Club. So you've got quite a big portfolio right now of stuff that you advise and stuff that you co-founded.
Yeah, it sort of goes in a bit of there is a little bit of a meshing there. I'm not doing 100 different things at the time. There's a bit of a sense to it. When I was working at the talent agency Chic Management, I met a man named Peter O'Connell, who was the other co-founder of the agency. And Peter was one of the founding directors of Optus, in setting up the second telco license and creating Optus. And so he had the idea to do a MASIM, and it was the fact that I was working in his modeling agency that gave me the opportunity to work with him on that deal. And that turned out to be a great sort of MBA in how to start a startup. I kind of didn't know that you could just come up with an idea, raise money, and then go do it. So that was the first time I kind of experienced that. Since then, Airtasker has been my full-time baby. But through the experience that I've built in building marketplaces, I've had the opportunity to help out and invest in other marketplace companies, where I can help those founders to learn from all the mistakes we made. And so that's where a lot of those other sort of opportunities kind of come from.
And then we come to the year 2012, which is quite a lot of time ago. You decide that you're going to start a business called Airtasker, and I've got to compliment you because today it's part of the vernacular. Somebody says, "Why don't you get Airtasker? Why don't you use Airtasker in virtually anything that you sort of do today?" So I have to compliment you on that. And if I look at the description of Airtasker, it's the #1 marketplace for local services, connecting people who need work done with those that want to work. So tell us your journey and how you started Airtasker, how you raised your first bit of money, and I do have to put on the table that I think I'm one of your original investors, so I will put that on the table for our listeners.
So the idea for Airtasker came about in 2011. My co-founder Jono and I, we were still working at a MASIM, so we were the first and second employees of a MASIM after the founders, and I was moving apartments, and I asked a friend to come and help me move. Our friend Ivan. The reason I asked him to help me move is because he has a truck that he uses to do deliveries for his frozen chicken nuggets business. And so, you know, you need a truck when you do moving. And, you know, I didn't want to go and use a white glove, you know, expensive removals company because I was a 20-something, you know, just moving a few things from one apartment to another. And so asked Ivan to come and help me out, and he did. But that did get us thinking is why do we ask friends and family to do all these kinds of, you know, these kinds of jobs when, you know, there's so many people who are looking for a way to make extra money and find a job? Like, why do we go through that pain and cause other people inconvenience? And what we thought about was there isn't a easy way to build or establish trust with other people in your community who could help you out with these jobs. The cost of search is just too high. To get someone to help you move for a day, you're not going to be bothered to like put an ad on a community notice board and then, you know, take phone calls to interview the people and, you know, have to figure out how much to pay them and trust them and all that. It was just all too hard. So that was the genesis for Airtasker. You know, it took us, you know, quite a few months before we actually went from, hey, that's a bit of a spark of an idea to actually, we're going to go and do this. And then, you know, it took us another few months to actually build the product and get started. But that was the very, very beginning or the kernel of the idea behind Airtasker.
And then you went out to raise money.
Hmm.
And just explain to that process. I mean, because a lot of people are finding it difficult to raise money, and you've raised quite a lot of money. And I guess your journey, I don't know, it seemed to be easy to me. I mean, came to see me and I put up money. How did you go about doing that, and how did you find the investors?
Yeah, it goes in ebbs and flows. So I think to clarify, I guess our first like real funding round was about $1.5 million, and it was done on a valuation of about $3.5 million. So, you know, much less than, you know, more than what traditional small businesses had raised money from, but much less than what people are, you know, raising off, you know, in a seed round, you know, these days. One thing I would say about raising money early on in the journey is when you're doing that, you're mostly selling the sizzle, you're not selling the steak. And so in many ways that can make it a bit easier because people don't ask you about like, what's the revenue, what's the margins, what's the profitability. It's more like, hey, is that a good idea? Do I love that idea? And are you a good person to go and start that? So in many ways that round is a bit easier, that very first round. I think then it can get really hard when you have to do a Series A and a Series B. That is when it gets a bit hard because people do start looking at metrics, and depending on what kind of business it is and what kind of investor you're looking for and how much you're willing to raise, that can actually be a big burden for you. Is, you know, that balance between, hey, we're still trying to build something, grow it, you know, chase a vision versus, you know, what's your burn rate, how much revenue are you bringing in, and all that kind of thing. With Airtasker, it's a network effect business. So there is no such thing as like a really small Airtasker. You kind of can't run the business profitably day one because the whole thing is it's a network. It's lots of customers meeting lots of taskers, and that's how we match people and get a good outcome for them. So yeah, it was a lot of pressure over those first few years. And as CEO, I guess my job was pretty much raising a new round of funding every year, and I'd probably end up spending a quarter of the year doing that. And then you have to have a day job on top of that of you know, trying to actually grow the business and operate. So yeah, pretty stressful few years in the beginning.
I remember when you and Jonathan came to see me, I was enormously impressed by the two of you. So I've backed a lot of early startups, and one of the things I look for, and I get it a bit wrong lately, is guys with vision and guys I think can execute. And the two of you came across as guys with vision and guys who could execute. And thank God I've been proved right.
I think, yeah, Jono and I did have pretty complementary kind of skills, and, you know, both of us had very similar sort of like culture and values. So yeah, it was a really, really awesome partnership that, you know, went for the first 4 or 5 years of building the business.
Right. And then if I look at some of your statistics today, and they may be slightly out of date because the last ones I could find, you have around 1.3 million customers.
Yeah, a little bit out of date. Yeah, it's around that number. But
what would it be
growing.
today?
Probably about 1.5. So
Wow.
you know,
Wow.
it's trucking along well. And you know, we got a lot of customers in Australia, and we're trying to take our Airtasker to the world.
And tell me, so then I'll ask you some of the statistics. So what's the dollar value of the work that you provide?
In what period of time?
Over a year, say, the last
Yeah.
year.
Yeah, so in terms of gross marketplace volume, we do over $200 million per year in what we call gross marketplace volume. So that's
Right.
the value of all the transactions that go through our platform. And in terms of revenue this year, we're on track to do 40 to 45 million of revenue, which is our share of the earnings that we generate for our workers.
Great. And now you've opened both in the UK and the USA. So how are those going? And also, how do you find the bandwidth to run a business in Australia, run a business in the UK, run the business in the USA, and be an advisor on all of these other various businesses that you are on?
Well, I would say that I spend 99% of my time on Airtasker. So I guess in terms of advisory and you know, how much I can offer to those folks, you know, that's somewhat limited. Although one thing I would say is like helping out other entrepreneurs or other founders to solve problems can often be quite self-teaching or self-benefiting too, because you know, you talk through a problem and you're looking at it from an objective stance. I've often sort of given them some advice and then said, oh, geez, I should probably take that advice myself because I'm probably not doing some of these things in my own right. You know, like I might be like, oh, geez, that looks pretty inefficient. You should really save some money there. And then I look at my own business and go, oh, yeah, geez, that was a good idea. We should do that internally. One of the things I would say about the way that we've structured Airtasker is it's a very high operating leverage business model. And what I mean by that is we have very low sort of operational load in the business. And that's what makes it so scalable. We've built a system, a platform that enables customers to ask for what they want, that lets taskers offer a solution to solve that problem. We've built a system to enable that through payments and insurance and things like that. And then what we've built is a system that ensures transparency and accountability. So, you know, if the customer doesn't follow through or the task doesn't follow through, we're able to track that and make sure that people are accountable to one another. Great thing about that is that's really scalable. That's something that when we do that, launch that into London, we don't have to, you know, do property leases or buy inventory or, you know, do local enterprise deals or anything like that. It's very much a system and a movement which can scale. That said, it's still a lot of work, and you know, we've got 160, 170 great people at Airtasker working their butts off to keep it all together as we scale.
Are those people, are a lot of people who run the UK based here, based in the UK and the US?
We have one employee in our UK entity, and that person at the moment is actually based here in Sydney. So if you talk about how scalable the platform is, it's an incredibly scalable platform that we can expand in a lean way.
So Tim, then when I've really posted a lot of jobs on Airtasker, not lately because I haven't needed anything lately, but you get a pop-up or a guy sort of has a note which says how much you guys take off it, what it costs to post, and how much he gets, with sort of a little bit of I guess a complaint, in that despite you think that you're paying X for the job, he's only getting Y. How do you cope with that, and how do you reconcile, and how do you tell the public that, because I've looked at your accounts and a lot of it doesn't drop to the bottom line. In fact, at this moment in time, you've just sort of broken even cash flow wise. So you do need that amount to actually run your platform. But how do you answer these complainants?
Yeah, so first of all, I think the complainers, you know, the people who voice their opinion are often a lot louder than the 99% of people who are very happy with the value equation. The 1% can be, you know, louder. That said, it's all good feedback. And this is something that we're really conscious of. The first thing that I would say is when you look at the economics of the way Airtasker works, what we do is we provide a system which is risk-free. What I mean by that is for taskers or people working on the platform, it's pay nothing to start, look at all the jobs for free. Only if you win a job and we pay money into your bank account, do you pay anything to us. Now, when we do take, that percentage is higher because we're taking something only on a success basis. But what it means is that you can use our product, trial it out, do a lot of things, and it's absolutely free for you to use. That's an important part of our business model because we want you to try it, give it a go, and we only want to make money when you finally do make money. That said, we have been exploring and through an acquisition as well as some of our own product development, different ways in which we can monetize the product. For example, rather than paying 15% of each successful job, maybe you want to pay $99 a month and pay to use Airtasker in that way and not pay the 15%. So we've explored that through the acquisition of OneFlare, which is a subscription-based model. We've also done a number of trials on Airtasker, in which we've actually sold subscription plans as well, and the feedback is phenomenal. What we have discovered is that you need to have both, because some people would rather pay as you go, pay a higher percentage, but only pay it when they win. Others would rather say, you know what, I back myself. I'd rather pay you a fixed fee, but if I win, if I don't win as many jobs as I thought, I'll cover that downside. But if I win lots more, then I win because, I'm paying a fixed fee too. So I think I look at it as layers of product, whereby we want to have everybody can always use Airtasker for free, but then we can offer different types of premium plans on top of that, whereby you can pay us in a different way. One thing that I have found remarkable is that Airtasker has significantly more jobs than some of our other platforms that exist in this ecosystem. We have almost double the number of jobs compared to another platform. But that platform, generates, 40 to 50% more revenue per job. 40 to 50% more revenue overall, even though it has less jobs. And so when you look at the, price that people are paying per job, we charge about 40% of what some of our competitor platforms charge. So there's definitely really great value in the Airtasker platform.
And one of the things I like is that the person only gets paid when they finish the job. So, but the person who posts the job has to sort of pay up front, but it doesn't get released until the person finishes the job. Do you find a lot of people just don't want to release the money, or is that a very almost non-issue?
That's mostly a non-issue. I would say, one frustration for workers used to be chasing up money from customers. Like that's one of the biggest things that people don't like about, working in local services is that, you do work for someone, they owe you a bill and you're chasing them to get paid. So we've solved that. Of course, everyone wants to make that even faster. They want to get paid earlier. But I think one of the things that Airtasker is steadfast about is the purpose of Airtasker Pay, that system in which we escrow the money whilst the job's being done, has been a huge value add in terms of creating trust between two people. Customer knows that the worker's not going to take their money and run. Worker knows if I do this job, I will get paid for the services that I've provided. It's really interesting because we didn't actually launch with a payment system when we started the company, but that has turned out to be like one of the biggest value adds in our marketplace.
And Tim, then what happens is a lot of the I don't know what you call the person who provides the work, the Airtasker, the tasker. A lot of the taskers say to the customer, listen, if you want a job, here's my number, don't go through Airtasker. So you've provided the introduction and you've given the marriage, and then they want the fees, but they don't want to come through the Airtasker platform. So what do you do about that, or nothing? And then explain to us the pitfalls of doing it that way, because there was a big current affair program, which I did watch, which the person hired the person without you, and they got into a big disaster. So can you just go through all of that?
Yeah, so first of all, in terms of the value that's being provided by Airtasker in a transaction is different between the first transaction and the ongoing transaction. So the first time, you're connected with someone on Airtasker, the value that's being provided is the connection. We've matched you with a person is perfect for you. And that's very, very valuable. If you're a small business owner or a service provider, getting a lead, you would usually spend 30% of your revenue or so back into marketing to get those leads. So the introduction or the connection is extremely valuable. Then the value that Airtasker also provides is payments, insurance, and a system of accountability, via customer service and via transparency, etc. Now, on the second transaction, we're not providing you with that introduction anymore. We're just providing you with that second lot of value: payments, insurance, accountability. And so I think as a platform, if you charge 20% on every transaction, it doesn't make sense, because on the first transaction, you're way too cheap. And on the second transaction, you're way too expensive for the value that's being provided. And so Airtasker's developed a model called Contacts, whereby customers and taskers can actually communicate with each other through the platform, and payments are done where we only charge 1.9% to the tasker through that, a much, much lower fee compared to what we do for those first transactions. So we've started to unlock those second transactions and seeing a lot of people see great value in that, lower fee, getting payments, insurance, and accountability. But we've got some work to do on education around that product. I do want to call out here, I think the elephant in the room, or the crux of it, is you cannot charge 20% on every transaction into perpetuity. I think a lot of models that try to do this, build resentment with their community, because you're not worth 20% every single time. And we're aiming to resolve that and really grow our share of the value that we provided.
So Tim, the 1.9%, that covers insurance, that covers, and the payment as well?
Yep. So we charge around about a 5 to 6% fee to the customer side of things, and then 1.9% to the tasker. And so the combination of those things is, maybe 6% or so. And that covers credit card payment fees, which are roughly 2 to 3%. It covers public liability insurance on all of those transactions, which is a couple of percent. And of course, a margin for Airtasker to grow our business.
I remember on a current affairs woman, she hired the person without you for the second task, for something for her kitchen, and he hit a pipe, flooded her kitchen. She came back to you and said, wants you to fix it, and you said, but you didn't do it through us. And I guess her saving of, in this case, would have been, say, 6%, was the most expensive saving she's had, because the tasker was nowhere to be seen after that.
Yeah, I think that's, I think it's a good reason as to why it's definitely a good idea to stay on a platform like Airtasker. When things go wrong, that accountability and that trust and that protection is really the value that we provide. And I think, if you think about where we're going to be in 5 or 10 years' time, I think we're going to look back and go, wasn't it crazy that we used to just pay people direct? There was no sort of centralized way to keep people accountable. We used to just invite people into our house, pay them, hundreds, maybe thousands of dollars in cash, and then just pray that it all went well. I think people will look back and go, that's pretty crazy. We probably should have been doing it through some sort of transparent and accountable system. And I hope that's Airtasker.
I had in my house, in my previous house, I wanted a aerial in my office, in my house. And I got someone, that was pre-Airtasker days, and I got someone, and two guys came, and their fee was $150, and it was a fairly easy job. And did they mess it up? At the end of the day, after working for about 3 hours, the guy said he wants $150, and I just paid them $150 to leave my house. They didn't do any job. I just had to cover up the hole in the wall that they left. It was a horrible job, and Airtasker would have cost me a bit, but end of the day, I would have got a reference. I would have got a person to come and fix it. It would have worked out.
Totally. Look, I think one of the difficult things about a platform business like Airtasker is it's hard to sort of describe some of the value. Like when you buy a pair of Nike shoes, it's very clear. You give me the shoes, I give you $100. That's the transaction. When you use a marketplace and there's fees, it's sort of like the idea that you're protected by insurance, and you have access to customer service, and there's a payment system. It's just not that easy to convey that, in a package thing, which is why I think, for some people, they come to us and go, oh, wow, Airtasker is like so cheap. It's unbelievable. Like I used to spend so much money on marketing to find jobs, and now I just, pay a small percentage to Airtasker. That's amazing. Other people like, I can't believe how much money you charge. All you're doing is providing a bit of insurance and a bit of payments, and, you're way too expensive. And so I think that's, just something in terms of like education and time it takes for people to sort of be aware of what the value is in a marketplace.
Customer acquisition is a very expensive thing for individuals. It really just is. And Tim, now we come to sort of from an investor point of view. You went public in March 2021 at an offer price of 65 cents.
That's right.
And your current share price is sitting at about 20 odd cents.
Mm-hmm.
So, and I remember your share price went to about $1.80 and went steadily downwards after that.
Mm.
How do you explain to the investor community that you raise money at 65 cents and it's sitting at 21 cents?
Yeah, so first of all, I would say that, thank you for clarifying that we actually listed at 65 and not at $1.80, because a lot of people look at the chart in Google, and because the price shot up on day one or day two to those kind of heights, people think that we listed the company at $1.80. We did not list the company at $1.80. We listed it at 65. Nevertheless, there's still a 65% gap between 65 cents where we were when we listed the company and 20 cents where we are today. In the meantime, we've almost doubled revenue during that period, and we're approaching profitability and cash flow break even. So we've done a lot, and yet the share price is down 65%. A big part of this, I would say, is the macro environment and the sentiment towards technology companies that are not yet profitable. And so when you look at what happened, over the past sort of 18 months, we've had a lot of interest rate rises. There's a lot of reasons to take your money out of stocks and, put it into a bond, or, just put it in the bank and earn 5 or 6%. And so when that money rushed out of the market, I think indiscriminately, pretty much everything in unprofitable tech or pre-profit tech got absolutely slaughtered. I do think, if we look at the valuation of Airtasker now, we're trading at anywhere between 1 and, depends on what maths you use, 1 to 2 times revenue on a trailing 12-month basis. And I would say that leaves plenty of upside relative to the long-term revenue multiples that we see in software, high operating leverage.
So what should the share price be on your valuation metrics?
Look, I think I'm hopeful that things will come back to, over the long run, 6 to 8 times revenue seems like where it would be, and on that math we'd be trading anywhere from sort of 65 to 85 cents. So I think that's probably where the long-term average comes out. My guess is that in this space there tends to be booms where it goes higher than those sort of 6, 7 times revenue multiples, and troughs where it's which we're in right now. But we need to demonstrate how high quality our revenue and earnings are, and I'm here for the long run to do that, to make sure that we can do that.
Magic question: when do we see profits? When do we see real profits grow, dividends return to shareholders?
So Airtasker Group right now is actually made up of 2 main types of business. One is we have scaled marketplaces like Australia, where absolutely the name of the game is prove the profitability, prove the margins, prove the efficiency of growth. And then we've got essentially brand new startup businesses in the US and the UK, which are the opposite of that, which is we can't starve them for growth. We need to invest into those businesses to get them up to the same economics as Australia. So we started breaking out those 2 business models. And in our full year results this year, we're actually breaking it down even more and giving more clarity around that. But essentially, in Q4 of FY23, we did over $2 million of EBITDA when we look at our Australian business and all of our global head office costs baked into that. So the wages of all the people that are running the business, versus the revenue that we're making in Australia. We made an EBITDA of about $2 million for the quarter. So, times that by four, you would get to sort of $8 million EBITDA run rate. The reason why we are still chasing profitability at a group level is because we're investing more than that into growing in the US and the UK. And so the answer, I think, to that is we could do one of two things. We could either take out that profit and issue it as dividends, or we could invest into new businesses in the US and the UK. I think with the leverage that we have on our platform, it makes absolute sense to keep growing and driving in the US and the UK.
Give us a time frame. Give us a time frame when we can look forward to seeing. If you're saying you can make $8 million EBITDA, give us a time frame to when the shareholders can see $8 million worth of profits. Overall,
we don't have a timeline on when we would actually.
It doesn't have to be next week or next month. Give us years.
Oh, well, I'm sure it will be years. The reason why I'm saying it's a long way off before we're paying dividends is that there are so many markets where Airtasker can launch into, and none of these markets have direct competitors to what Airtasker is doing. I would also say that, and you can sort of look at what we've recently done with our partnership with Channel 4 in the UK, is we've really figured out a playbook on what made Airtasker successful in Australia. And so I think we're really zeroing in on a way to replicate that playbook at scale across new countries. And it's a pretty economically efficient growth model.
I don't think shareholders are necessarily wed to dividends, but I think they're wed to seeing a share price that's way above the 65 cents. I think you have a lot of those shareholders who have been there for the long term, and they want to see that the business, and they are patient. I mean, they've been in there since 21, which is going on for 3.5 years now. They want to see growth. They want to see the market start to appreciate that. I mean, Tesla didn't make profits for years. Amazon woke up one day and made profits. It made losses for a long period of time.
Yeah.
But I guess one wants to know that there is a roadmap, because I mean, there's a lot of countries in the world one can go into. We can't always be expanding the whole time. We do need to start consolidating revenue and bringing it back to profits.
Yeah, I think certainly in the current environment, we're committed to overall cash flow positive in FY24, even including that expansion capital. So certainly there's a level of discipline there whereby we have a lot of cash still on our balance sheet, but we're determined to prove in FY24 that even as we expand globally, we're still cash flow, free cash flow positive overall. So that's a commitment that we've made to the market. Of course, as a builder and as a founder, I'm it's always frustrating to have the capital there and not to be investing in full, but I'm really committed to walking that walk instead of just talking the talk, which I think a lot of technology startups were doing for a number of years.
I see we're running out of time. That's been a fantastic interview. Is there anything you want to add in the last minute or so?
Oh, look, I think Airtasker, not only do I think it's a really exciting business to be building, I think it's also something that is having a positive impact on the communities in which we're launching. Really excited, to see people, especially during this cost of living crisis, actually be able to proactively get out there and say, I need to earn some extra money. I've got incredible skills. And, for Airtasker to be a way for that to come to fruition is something that, it's really what keeps us going, even though the markets haven't quite appreciated the value that I think we've created. So yeah,
your top tasker earned around 300 grand. That's got a lot of money.
Yeah, it's really amazing. And we have over 13,000 weekly active taskers on our platform who are earning their income through something we built. So that's something we're really proud of.
Tim, thank you so much for the time. It's really been appreciated. Thanks so much. Hey, take care. Thanks.
Thanks, John.
Thanks a lot. Cheers.